Hi everyone. Today we did get a little bit of a bounce after a roller coaster of a trade. You can see we were down all the way into the 482 area, got all the way up into the 522 area, and then finished somewhere here in the middle, down about $1 on the day. So huge volume through wicks to this key level here like we expected to. But let's take a quick look at the charts and see if we can find some direction for tomorrow. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. In news today, we got Peter Navarro coming out and downplaying the sell-off while getting slammed by Elon Musk, and reportedly they are all going to Mar-a-Lago for some discussions. You can see here, Trump took aim at Peter Navarro, who has a PhD in econ from Harvard. I don't understand really how that could be a bad thing. We definitely should listen to people that are educated on certain topics, and I would like to believe that Trump is listening to these smart people, and Navarro seems to think that this sharp sell-off is not much of anything to worry about. He expects the Dow to hit 50,000 during President Trump's term, which I think would be really impressive. I'm not sure if that's real life, but if you believe him, apparently he's very smart, from Harvard. That's something to keep in the back of your mind. Again, he just does not think this is very important. And personally, I do think there is still some potential for sell-offs and an economy that is going to slow here over the next year. But again, can it rally into the end of Trump's term? I think it absolutely has to if they're going to stay in power. So I would guess that they're going to do things that would allow the market to rally from here. They're doing it early in his term as president in order to allow that to happen. You can see here, they're stunned, so much money being lost, and they are slowing down their purchases. Hopefully, we have some of these finance chiefs headed to Mar-a-Lago, and they do have some kind of cohesive plan that they can message a little better to the public. Moving over to fear and greed, we are still at a 4. You can see we were at a 4 previously, still at a 4 here today. A little surprising we didn't see that step up at all with the movement that we got in today's session, but basically sideways movement on price. All of the indicators still very much bearish. You can see put call ratio almost at a 1, not quite there yet. Volatility still spiked all the way up there. Safe haven demand still very low, and junk bonds still very high on that spread, but I thought we might have seen just a slight tick up to bring this to maybe a 5 or something, but nope, still at a 4 and incredibly oversold. Moving over to the economic calendar, you can see really nothing here for today or tomorrow, but for Wednesday, want to see how that 5-year note auction comes out, and then the Fed minutes. Definitely going to be interesting after the comments we got out of Jay Powell on the Friday. Want to see what they were talking about in reference to tariffs. Obviously, they didn't have the whole picture at the time of the meeting, but we want to see what comments come out of there and what they're thinking about potential cuts going forward. Moving over to the charts, I just wanted to highlight the monthly chart because we did hit a very important level here. You can see it marks a bottom back here in June of 22, marks some opens and closes here December of 22, marks the bottom clean in November of 23. And then we touch that bottom right at the bottom of this month's wick around the 48 level. So interesting level there. That also takes you very close to this high from the February of 22 highs. So that takes you into this zone here, just short of it. Really, that's 4,800. So we didn't quite touch it, but critical zone there. You can see monthly momentum and RSI, everything's still negative there, but interesting to see that we touched that level, found a really strong bounce. My guess is we probably still come down and touch this at least one time at that high from December of 21, but interesting to see that really strong, powerful rejection off of that level. And then you can see it on the weekly chart again, coming up just short of that 144 EMA. This is the zone we've been looking for. Going to touch that probably 200 right there as well. We're just really oversold, so I don't know how much lower we can go, at least in the short term. And then looking at those SPY charts again, you can see the trend that we touched that same level on the SPY charts. It's around that 48, 45 area, so pretty much the same as the zone that we talked about. And that takes you not quite to this high here. That's around 457 or so, the high from December of 21. So you still have a little bit of room. If we did go from current price to that level, that would be about another 9.5% or so lower. So again, I don't think we've bottomed by any means, but we did touch a really important liquidity area. You can also see that we took out this zone here from April of 24. And again, there were buyers hanging in there. There were some stop losses in there, definitely. And then looking at that hourly chart here, you can see the big move down, gap to that trend line, gap to the level, 482.75 was the level, touched that level and found some support, rallied up, came back and tagged that level, just barely taking out the pre-market lows. And then look at that RSI, big divergence on the RSI. Buyers came in and drove it really, really high. Ended up going all the way up into the 523 area and then pulled back middle of the range, continued to show some strength here in the after hours. So is this a short-term bottom? These big gap downs and rejections and rallies out usually mean that there is some buyers, at least enough to support it for now. Again, look how low we were on the RSI. That was a 12, 14 range here on the hourly chart. Very, very rarely goes into that zone. And then you can see buyers coming in. So again, short-term bullish coming off of the much lower low that we ended up getting early in the session. In terms of levels for now, 509.77 to the next level, 513.27 takes you to the middle of this consolidation. But the more important level would be that kind of 517.12 area. You can see the wick low, the wick high. This is the more important zone, 517 if 509 breaks. Moving over to the Tasty charts here just for a moment, you can see that 144 EMA on the weekly right there. That was what we thought we were going to touch, and we overthrew it pretty substantially. 499.11 was that level. We ended up closing above it, so there were some buyers in this zone after overthrowing that area pretty substantially. You can see that high back here from that December of 22 timeframe that we were talking about, very, very close to those highs at the low of today. So maybe that's why buyers are coming in, finding that area as a zone of support, obviously taking out this area that we were watching closely as well. Again, pretty powerful, interesting areas here. 499.18 is the current level of that 144 EMA. And then looking at the daily chart here just for a moment, you can see we are still extremely oversold, huge volume on the session. So really no changes here, very bearish conditions, but extremely oversold. And then moving over here to the NASDAQ charts, you can see we ended up gapping down almost to this new level. I've been working on this chart, so some of these levels are a little different. 401.73 I think is a critical zone back from this consolidation here. And you can see I've actually bolded some of these levels. So clean pivot points, I'm going to treat those with a little bit more respect when it comes to markets here. So you can see this clean pivot back here from April of 24, that is at 411.43. Got back above that, rallied up, and then you got the low here from 5 August week, and then you got the low here from 3 September. So all clean pivot points. And then you kind of got like a consolidation midpoint here at 432.84. So those are the levels I'm watching right now, with the high and low kind of major levels, and then those intermediate levels, which I think are still important, but not as important here compared to those more key pivot points. And then looking at the hourly chart, it looks very similar to what we saw on the SPY charts here. You can see big move down, 401.73, that new level that I'm working with. Got above here, kind of consolidated at that key pivot, rallied through. You could have bought kind of in here, a little bit choppy on that level. Again, this is why I don't think those levels are as important, but you can see after hours, I think that level actually stayed the same from the previous kind of analysis that I had there, but rallying up right now after hours, 432.84, and then above that you can see this kind of consolidation, 438, and then that more important level up there. So we'll see if we can get into this zone up here. Right now, again, still looks a little bit bullish for me. The low on the RSI was a 14.87, really, really low key levels, starting to hold some short-term rallies. And then moving over to the Tasty charts here, you can see that 144 EMA on the weekly still sitting there at 418.59, ended up being support. We overthrew it substantially, again, just like we saw on the SPY charts, taking out this low here, but we did end up bouncing back above it. So far, no volume on the week, but I would like to see a close above that level, and so far so good on that. And then looking at the daily chart here, you can see pretty much unchanged on the day, still extremely oversold, way below that lowest ATR band. Typically those are nice little buying opportunities, and eventually you do get a nice little return there when you're well below the lowest ATR band. You can see it here. If you bought on those lows, you got a nice little move to here, or at least a consolidation and then a move into the mid-range here. Do we see another move like that? If we did, that would take us into the kind of 450, 455 area. That would be an interesting move, but I don't think I'd be able to hold it that long. This is still very much a downtrend. Be very cautious if you're trying to trade counter trend, because this could absolutely flip and go much lower. Moving over to the Russell and the Dow, you can see both of these ended up falling even more here today. Even at the close, they were down 1%, but look at that after hours move. Up about $5 on the Dow, after hours up about 2 on the Russell. That would take you right back to this major trend line here. So buyers coming in, you hit this consolidation low for the Russell. Back here at this 172.60 area, you can see this consolidation low. Obviously, the key low is going to be down here, 164 to this kind of 162 area, but this is definitely a relevant area to watch. 172.60 was the level. We touched that level and caught a bounce. Are we going to go too much lower than that? Hard to say for now, but there are absolutely buyers in that area. Obviously, the Russell has been beaten up really dramatically. Feels like forever ago we were in the 160s, October of 23, but now we are very close to that level once again. And then looking at the Dow, started to do a little bit of work on here. You can see key pivot point right here, 179.35. Touch that level, overthrew it to my next one. 169.50 is that next area here. Touch that and bounced. And then you can see, like I said, after hours, basically unchanged, actually up a little bit now, looking to push towards 387.77. Moving over to the Mag 7, the Mag 7 hit that critical level there. 230.52 was the next level to the downside. You can see we touched that. That was the low back here from 5 August. Caught a really strong bounce, ended up positive, up about a third, and now you can see your next resistance is going to be 240.41. Looking to see if this can push back up to 265 or not. Critical zone there. Otherwise, huge volume, big push, after hours up another $4. It seems like we're going to get a pretty strong push tomorrow if this continues into the after hours. So again, critical level there. Looking for 265 if we can get above it and hold. Moving over to Apple and Microsoft. Apple was down 3.67%. Even with the after hours, not as strong there. Hit that 200, so we hit that major level, the 177.92 level. And then 176.15 was my level, and there you can see this kind of consolidation high in there. But we'll see if it can get above any of those. Doesn't look super great. Obviously, Apple is very impacted by these tariffs. I'd probably stay away from it for now. Maybe you want to trade off the 200. I could see why you might, but I would be patient. And then looking at Microsoft, also down about 0.5%. After hours, it is slightly positive there, back above that previous there. So overall, you like to see that. 160.99 is the level. This consolidation low, touch that level. It is below the trend. Don't love that. Didn't see huge volume on this one either. So 144 EMA is your support. 147.81, touch that level. Found a little bit of support, but again, I would be patient. Maybe this is a bounce, retest, continuation lower. But again, after hours, slightly positive. Moving over to Tesla and NVDA. Tesla was down 2.5. Not terrible, but ended up bouncing to unchanged in the after hours. NVIDIA up 3.5%. Again, also up after hours. So it got into the zone we talked about. 90.69 was the zone I thought we would get to bounce. You can see that low pivot point here from that August 5th level. And then we ended up getting back above that and then rallying through to the next one at 95.74. So right now, 95.74 is support, looking for 106.6. Got the trend line as resistance up there. I do think that zone is still going to be resistance, but in the short term, I think we'll probably get there, 106.6 as your kind of short-term price target. And then short-term target for Tesla, if it continues to stay bullish, would be 164.68, looking for that zone. 55 EMA in that same area as well. Moving over to staples and discretionaries, these actually continued to go lower at about the same speed. So still an everything sell on this chart. Interesting to see that as well. So looks like tech starting to help markets gain a little bit of momentum. The consumer, not so much. Discretionaries and staples falling almost back to the lows here from January of 25, round tripping that move on staples. The support for me is still 75.40. That takes us back to this kind of consolidation in here. I could see why you would work off of that level though, kind of in the 76 area. Either one I think makes sense to me. I usually go for a little bit deeper level, which I think is 75.40. And then looking at discretionaries, it's really nothing here that it touched that was super prevalent. You can see a kind of pivot here in May, but realistically, you think I would expect this to go to 170.68 at least right here at this pivot. You can also see it back here as well. So 170.68, my guess is we'll go a little bit lower and touch that at some point. But again, short term, extremely oversold. And I could see why buyers are coming in looking for this relief rally, potentially back into here at least 196, 197, somewhere in here. Moving over to real estate and utilities here, you can see real estate actually was one of the worst performers on the day, 2.5%, almost a little bit more than that to the lows, but ended up at 2.4%, back above the 37.68 level. I actually had to add some levels here. You can see this kind of consolidation low here, and then the key pivot point at $35. I like real estate anywhere in here. I like it in this zone now. The yield at current price is about 3.6, 3.7%, and I think real estate is going to continue to do quite well. So if it could actually go to 35 and I could get a little bit better yield, that would be great. And just zooming out on it here, you can see historically anything below 38 is a buying opportunity. So anytime we get into this zone here, we ended up going much, much higher. Same thing, got back into this kind of 35 to 38 zone, ended up going much, much higher. So continuing to accumulate real estate, continuing to get those dividends and get more real estate. I do own bonds and things of that nature as well, but it is a little bit interesting to see some of these kind of generally safer stocks starting to sell a little bit. Utilities had a massive run. You can see it here. And then we consolidated for a long time and we're starting to see kind of cracks in that rally. So maybe it's just too expensive relative to markets, but generally this is considered risk off, and we are absolutely risk off in my opinion, but you can see some big sells coming through on utilities. Moving over to breadth, look at breadth. We got into this zone here on 20-day breadth that we barely ever get into. You can see the last time was September of 22, ended up being a great opportunity. Same thing here, June of 22, ended up being a really good opportunity. Before that, you have to go back to March of 20. Again, great opportunity to buy equities. Of course, this was COVID, and we ended up going much, much lower, down into the basically 0.2 on this indicator. Almost never get there. The only time before this was 2018. That was another great opportunity. And then before that, you have to go all the way back here to 2011. So the chances of us going there, I just don't see it. I don't think we're going to go that low. And at the 0.25, 0.23 area, I just don't think we can go too much lower. I would guess we're going to see some seller's exhaustion after hitting these key levels there on 20-day. 50-day does have a little bit more room to go to that 2.75 level, maybe. Again, critical zone here. We touched the low back from October of 23. Again, ended up being a great opportunity. You can see back here September of 22 and that same zone, June of 22. We did get a little bit lower. If we do get any lower than this, again, good opportunities for the short to medium term. Can we go a little bit lower on 50-day? Probably. Can we go lower on 20-day? Probably not. Moving over to the dollar here on the hourly and the daily, you can see pretty consolidative, pretty consistent gains here on the hourly. Are we going to reject from this 103.6 area, the 200 SMA right in there? Certainly a possibility, but we've seen 2 days of gains. Right now it's kind of consolidating at this low here. Want to see it continue to gain and potentially go to the 106.8 area. That would be interesting. So far, dollar weakness has not spelled strength for equities, which is a little bit recessionary. Want to see this hold some gains and rally up back into the 106 area. I think that would comfort markets at least a little bit. Moving over to bonds. Bonds did not have a good day at all. J&K continues to waterfall off here. Very, very interesting. $91 is your next support. Huge volume on this selling. Critical move to that 91 area. You can see that brings us to this middle consolidation. Your next one's 89. This has been interesting here. I did not expect to see J&K waterfall off this much. You can see we were in the zone for a long time, held up bullish, and then we just had this really strong pivot to the downside. Again, 89, interesting buying opportunity. If it gets anywhere near 86, I'm going to continue to buy it in here. I just don't believe that we're going into a very steep recession to the point where we're going to see huge bond defaults, in my opinion. Maybe not, but I just don't see it, at least for now. And then looking at TLT, still love TLT. It was down pretty hard on the day, 3%. You don't love that. But we're still in this kind of consolidation. As long as that 55 holds, we're in good shape. The volume on the day was not super great. And I was kind of interested to see such a move. I think markets are still anticipating quite a bit of cuts before the end of next year, even some more this year now with the tariff news, potentially 3 to 4 cuts. I don't really believe that's going to happen, but if that is going to happen, we should see bonds going a little bit higher over the medium term. Either way, though, I still like this as a left shoulder head, right shoulder. I still think this is going to push back towards the 100 area, and structurally that has not broken quite yet. Moving over to volatility, just wanted to highlight the fact that bond volatility continues to spike as well as equity volatility. Look at the move index just rocketing higher with a low, higher low setup. Rocket to that higher high, probably going to head towards this trend up here. So bond volatility also quite high. Still think it's a pretty good opportunity to be buying. things with yield. And then you can see here the VIX. The high for the VIX was in the 60.13 area. That is about as high as it goes. You can see that almost took us back to this high here. That was at a 65. Before that, you have to go all the way to COVID before you see those same highs. So is this an opportunity? Again, I think so. The VIX is super overbought at an 83. Very rarely gets there. And if you're buying in those zones, at least for the short term, usually that's still an opportunity. Moving over to my accounts, I made a little bit of money. I had those puts going into the day. I held those pretty much to max profit, and then I rolled out here to a 408 put for tomorrow for $1.65. I still think there's a potential for a down move, but I guess I should have been more aggressive. You can see we're up about $5 after hours. I'll be watching this closely. This should bring in about $300 more tomorrow. So not so bad. That should bring me close to about $700 on the week, which would be great. If we continue to see some of those levels break to the upside, I might get a little bit more bullish, but for now, I still want to be cautious. Overall, still bullish going into tomorrow, but pretty well out of the money at 408. Let me know down in the comment section what you think of the price action today. Are you buying at these prices? What do you think about those really low lows in breadth? Is that the trigger for buyers to come in? Let me know. Otherwise, like and subscribe if you got any value out of this video. Make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.